cosmonaut here. All right, well, thank you very much for this opportunity to speak with you all. Last, but hopefully not least at this point, but one of the benefits of being able to speak at the last point, especially with the topics that have been discussed earlier, is that I'm going to be touching upon all of those topics towards the end, as sort of like a conclusion. It sounds more like fortitude or fortune in this case, but chances are probably Morton and Ferdinand would rather attribute that to their genius of agenda setting. My name is Alejandro Garcia-Monterde. As you can see from my name, I'm actually Canadian. I've been in risk management for the last 23 years, primarily within North America, Latin America, Western Europe. In the last 7 years in Central Eastern Europe, including the CIS countries, Russia, Kazakhstan, Belarus, and Ukraine. During those last 7 years, I've been primarily working for Raiffeisen Bank, Raiffeisen International, where I was one of the directors for SME risk and for market risk and small corporate risk in that area. Part of my duties actually was also dealing with compliance in terms of anti-money laundering, particularly within the CIS countries which I was responsible for, which I just mentioned before. Within the last year or so, I've been moved over to management consulting, and for the purposes of disclosure, I will no longer be at BearingPoint, and we'll be moving on to Zeb Consultants. So for those of you who would ask for my business card, and I'm not going to give it to you, it's simply because there's no sense in sending out an email that's going to get sent back. But nonetheless, I will be in contact with you all. Anti-money laundering, certainly a significant topic if you have been reading the papers recently with what's been happening at HSBC within Mexico in terms of the Know Your Customer violations, which resulted in some heavy fines, but unfortunately hadn't resulted in punitive damages against the actual board members who were responsible. And I'll get to that a little bit later, but I'd just like to emphasize that point because it will be significant in the discussion. So as I mentioned, I hope that font is not entirely too small. Usually my habit is to just turn around and take a look from this direction just so they read it rather than looking it down here. I think that what the biggest driver right now, and it's not just within the CIS countries, but the biggest driver for the violations of AML is particularly, let's say, what Stuart had mentioned prior to that, and also Elena, is the fact that margins are significantly smaller. And the board members, with all due respect to them, in their pursuit of making sure that shareholder value is there and retained, which is of course a product of retained earnings and growth, they will start to cut corners, as in the case of what happened at HSBC in particular. The fact of the matter is also then that Basel III compliance issues, as Alex had mentioned as well, sorry, Henry had mentioned as well, has also been driving a lot of bankers in order to find other areas of trying to squeeze out more profit. What's happened as a result? Well, there's been a great deal of complacency overall. It's certainly within the clients that I've been dealing with. It's either complacency, tolerance, or even complicity. In other words, they're actively involved in it. It looks like in 2013, it looks like there's probably going to be further violations. There's a considerable amount of investigation still in the offing right now, certainly within North America and some parts of Western Europe. And of course, then, this is not only dealing with financial institutions, but non-financial institutions as well, which I will get into later. The most common drivers for AML are probably, all of you are probably very much familiar with it. I've emboldened the ones that I wish to discuss in particular and what the changes have been in that area. The most common ones, or let's say the most sexiest ones, for lack of a better term, are proceeds of crime, naturally, and the other one is terrorism. Overall, because the focus is between those 2 points, simply because of the dramatic nature of those topics themselves, and particularly with what's been happening in the last 10 years with the war on terror, there's been an inordinate amount of emphasis placed upon those 2 topics in particular in terms of pursuing AML compliance regulations within financial institutions. And quite frankly, going back then to, let's say, Henry's argument that regulations stymie or provide a cost center for most financial institutions and prevent them from growing or from bouncing back from difficulties. The inordinate amount of focus that has been placed on those two areas simply because of the dramatic result that comes out from it, right? It makes headlines, it gives financial institutions the impression or the illusion to the public that they're actually forthright and that they're honest and so forth. The other 3 points that I'm going to mention is, of course, the tax haven or the tax evasion issue, which is now becoming significantly changed over time because of the crisis. And in particular, I will use the business case of Switzerland, in particular with what's been happening in the last few years. Actually, within the last 5 years, and what's been happening dramatically within the last few months there. The other issue is the hiding of bribery transactions. This has been an increase, not only within the CIS, but within other emerging markets in particular. And I will mention what the major drivers are in that area, and it may very well surprise you as to what they are. The other point is, of course, the lower margins incentivizing firms to look the other way, which I will get to, which is the third point. Financial institutions are, in fact, competing for corporate loans. One of those issues in particular is the fact that many corporate banks right now, in their hopes to try and lend more while competing with corporations which are doing bond issues, for obvious reasons right now, they're actually now reducing the restrictions in terms of granting these loans, and these are going to provide other problems, which I will mention specifically in terms of AML. At the bottom, I mentioned that there's both opportunities. The opportunities that do exist and the challenges that do exist primarily is with the tax evasion business case, which I will show in Switzerland. But at the same time, this is going to be a very long and drawn-out process in terms of reaching acceptable AML practices, not only within the West, but certainly within the CIS countries themselves. The business case with Switzerland. Obviously, Western governments, Western Europe, North America as well, has been now pursuing much-needed tax revenues in order to shore up their lack of responsibility, as Stuart had mentioned, for their budgets and for their deficits, and of course, the fact that they need to finance a lot of these bailouts as well. And then there's, of course, the whole issue about simple fairness, right? We have a public right now which is overall highly unemployed. There's a considerable amount of bad press or negative press against what they would consider to be fat cat bankers. I used to be one of those at one point until I grew up. Nonetheless, the driver really is in order to start pursuing these tax cheaters. Well, the easy target is, of course, has been Switzerland at this point. Over the last 5 years, they've been fighting tooth and nail against any sort of treaty that would reveal or that would break down their privacy requirement or their privacy laws in that case. It's been 80 years since they've been enjoying that. It's been their unique selling point, and it's provided them with a great deal of profit, a great deal of controversy as well. But now it's been changing dramatically over the last little while. In terms of February 2013, they've now agreed to the US FACTA requirements, and now most US citizens which do have assets overseas, and particularly within Switzerland, are now being reported to the local IRS. The same situation is happening right now with the EU, and it's now being passed within the Swiss Parliament, and EU citizens are now also going to be revealed to their respective internal revenue services and their taxation. This is a fundamental shift. Okay, and the vast majority of these assets from these Swiss bankers are from those two areas. Of course, within the CIS countries, there's a significant amount as well. Now, what happens with Switzerland? Well, their unique selling point has now been compromised to a certain extent. And there's a flip side to this coin. So there's a good situation and there's a bad situation. What the reaction has been primarily is that for those high net worth individuals in the past, which have been on the lower end of the rung, Swiss banks have basically given them discretionary accounts. What that basically means is that those discretionary accounts, the decision as to how they wish to allocate the funds in these financial institutions is based primarily, or is up to primarily to the account holder, with very minimal advisory services. Those high net worth individuals which have very large balances and very large amounts obviously have been dealing with the advisory services, and these are very fee-rich opportunities for these for Swiss banks over the years, and they've been extremely profitable in that area. Well, now there's been a shift. Now they're trying to lower the threshold for the advisory services and actually asking primarily what these discretionary account holders have been dealing with in the past, and actually transferring them over to the advisory services in order to try and shore up some new fee income. And it's actually been quite successful, simply because now, from a sales perspective, many of these individuals who were not, or are not high net worth individuals, but not, let's say, these are the millionaires, but not the billionaires, are now being treated like billionaires, and they're actually enjoying this service, and they're actually prepared to pay for it. So there's been some opportunity in that area as well. But then there's another area. Speaking for myself from an anecdotal basis, when I was working at an investment bank in Canada, there was a private wealth segment there. And I had shuttled between Toronto and Zurich on many occasions. And usually I was harassed quite often with Canada Customs because of that fact, in terms of having them try to download my computer and see whether or not there were any lists of any private clients in that regard. And of course, this has been a great deal of worry for many Swiss bankers over the years, and it's restricted them actually to even pursue new markets elsewhere because of the bad press they've received. With the elimination, or at least the reduction of the privacy and the secrecy laws, there are opportunities now for Swiss bankers to go pursue other markets like the CIS, and certainly Asia, where the GDP is growing significantly. So here's an example of AML where the backlash has actually provided an opportunity for Swiss banks in order to change their tune, pursue other revenue streams, and at the same time pursue other markets. Switzerland will definitely be the model, and we'll see how successful it'll be in the next few years. But make no mistake that there will be a domino effect for other tax havens such as the Cayman Islands or Liechtenstein, etc. Again, as I mentioned, there is going to be a long, long route in that regard. The next point is the issue of bribery. In other words, unusual transactions which have been passed on for the purposes of paying off regulators, paying off people that issue licenses in order for large corporations to do business. What most people will argue is that this is a cultural thing, it cannot be eliminated, and there's nothing we can do about it. Well, it's not entirely true. Just to make a comparative analysis with, let's say, the drug trade or the narcotics trade, it's primarily a demand-driven illicit activity. So if I were to compare, or to use a small example where you have Mexico and the United States, Mexico is not, or Colombia and Mexico are not providing their illicit narcotics to the United States because they've got so much supply, but simply because there's the demand in the US for it, okay? The same situation, if I were to just switch it around, within Eastern Europe is the fact right now that Western corporations, because their profits have been soft since the crisis, and the economy and the GDP growth has been also soft, there's a great deal of pressure upon these individuals in order to pursue other markets. The emerging markets are the great opportunity in this regard. And the driving impetus for this has obviously been the double-digit growth in many instances. So I've identified some BRIC countries just to show you some percentages in terms of what's been happening in bribery, or at least what's been going on in terms of the need to pay in order to play in business. Improper payments, inappropriate giving or receiving of gifts, I'll get to that one more specifically, and of course conflicts of interests. The clear winner as far as the BRIC countries is China. There's obvious reasons for that in that regard. But if you take a look at the bottom, where this is a weighted average, by the way, and this is based on considerable research from McKinsey and from PwC in particular, where I've included Russia, Ukraine, Kazakhstan, and Belarus. You'll notice then that the largest one is in terms of conflict of interest in 10.9%. It's pretty much well over the average nonetheless in terms of improper payments. These countries are, let's say for example a country like Kazakhstan, it's very much motivated in terms of taking advantage of its natural resources. It's a commodity-based economy. And in order to do that, it requires a great deal of technological infrastructure in order to access its natural resources in that regard. Because of the political difficulties that it has, or the uneasy relationship it has with Russia, and in its desire to become much more independent, it's prepared to do business with Western companies, in particular, let's say, within the oil or petroleum trade, with Dutch companies which have a great deal of high technology in terms of accessing or getting to the oil in that regard. There are many other companies, let's say from Texas as well, of course, from the United States, and they're also competing with these Dutch companies. And there's a considerable amount of graft and a considerable amount of bribery of these politically exposed individuals, and the opportunities for hiding transactions for bribery increases as a result. But the motivator primarily is because of the economic conditions that we're faced right now. The West, as I mentioned, is looking for those profits which have evaporated prior to the crisis, or evaporated after the crisis, I should say. And then afterwards, of course, they're looking at the new emerging markets, which are more than happy because of bureaucracy, perhaps because of the desire for the speed and the development of their economies, are taking advantage as well in that regard. So this is something else to look out for. The other issue is that in the West, for example, there are some very well-developed whistle-blowing policies within corporations. So in other words, there's an actual procedure which gives anonymity to individuals within a corporation or within a non-financial institution and a financial institution to report any sort of anti-money laundering or any non-compliant activities. Within the CIS countries, because this has been very early and hasn't been well developed within the last 20 years after the fall of communism, or the fall of the Soviet Union, the fall of the Warsaw Pact, then there's very little experience. That is not to say, however, that the West is much better at it. In fact, one of the biggest difficulties as well is that many of these whistleblowers are not well protected afterwards. In fact, many of them even undergo a great deal of criminal proceedings against them. So there's really no incentive, quite frankly, within a lot of these policies, even the West, for an individual to put up the red flag when they see incidences such as these. And this is, of course, even magnified probably 10 times in the CIS countries in particular, because of the fact that politically, and also in terms of your career, even if there are these anonymity events, it's very difficult, or people are reluctant in order to expose them. And also the fact that a lot of these incidents these individuals are politically integrated within the system, and in many cases they are the enforcement officers themselves. So it's a no-win situation. Now, the other event, which is happening slowly right now, and this is a prediction based upon my opinion, and certainly many of my other colleagues as well within the financial institutions. As Elena had mentioned before, the growth of corporate loans, it seemed to have stabilized, and certainly it's still dropping within retail. I will just follow through the events that have occurred, or at least I can see them as one moving into the other one and seeing what the final impact could be in terms of risk. So between 2008 and 2011, obviously corporations have been deleveraging either on their own, or the financial institutions of which have been granting them these loans have been forcing them to deleverage. So, and as a result, because of the scare of the crisis, borrowing demand, certainly within Central Eastern Europe and the CIS and the West, has been soft, okay? And at the same time, and this is another point which I will discuss tomorrow in the master class, has been this drive for restructuring corporate loans to the extent to where there's no valid business case. That is to say, for the sake of simply retaining the customers. And this, in many instances, has not only reduced the revenue streams, but reduced the revenue streams to even a negative point where there is actual repeated losses. So there's been no science, there's been no business case in order to either force the client into bankruptcy or not. As a result, these corporations over time have been able to build up more cash within their portfolios, within their balance sheet in that regard. And the borrowing remained soft. As the borrowing remains soft and they get more cash in their portfolios, some confidence is starting to show. In fact, if the statistics in terms of the survey that's been offered by Elena were they're expecting some strong growth within the economy, or at least they're hoping that there is, corporations are now starting to expand. Even with low interest rates, historically there would have been more M&A activity. This is not in fact the case. What the corporations are doing now is issuing bonds and taking advantage of the capital markets. Corporate lenders, financial institutions with corporate portfolios, in a great desperation in order to shore up their corporate accounts and corporate lending portfolio, are now doing two things. First is reducing their interest rates, obviously for being more competitive. For the purposes of AML, the biggest concern is the fact that they're making their transactions or the underwriting very covenant light. In other words, the restrictions which corporations have in terms of how they're managing the borrowed funds in which they get. What does this mean in the cases of AML? Well, primarily I think that the biggest issue is the fact that non-core corporate activities are going to be financed by excessive borrowing. This, okay, not to be facetious, but to give it examples that I've experienced, let's say within Raiffeisen, you basically have corporations, independent privately held corporations, which are using their money to buy themselves a yacht or a summer home in Budva in Montenegro, rather than investing it within their own corporate dealings. At the same time, nefarious organizations will actually force corporations which have a lot of cash on their balance sheet and a lot of collateral, acceptable collateral, mind you, in order to borrow heavily, either through intimidation or through outright blackmail. And because financial institutions are indeed desperate in order to pursue these margins, in order to keep these corporate loan portfolios high, will probably over-leverage a lot of these corporations. And this creates another risk, another possible risk in terms of another credit crisis. Understand that, speaking as a quantitative risk manager, the scorecards themselves, which review the rating of these companies internally, the scorecards themselves, in terms of the indicators and the weight of evidence, very few of those indicators show whether or not a covenant has been violated. And because it's a very subjective interpretation as to whether or not this would increase the probability of default, they're largely ignored. So imagine, if you will, then, if there's less and less covenants being forced upon these corporations, there is a real, however subjective, possibility that they become over-leveraged, and that, in fact, the probability of default increases, or at the same time, that it is soon discovered that a great deal of many of these corporate loans are actually being used to fund other non-core banking issues, which would fund other areas which are nefarious in that regard. So, this is an expectation that's already happening in Western Europe in many instances, and there's a real danger that it's going to happen out here in the CIS countries, although there are some reputed arguments in terms of the statistics themselves. Pretty much those are the three major issues that we've seen right now in AML. Obviously, I would welcome any sort of comments or any sort of feedback in terms of how you would interpret it, but basically, this exercise has been simply just an observation as to what the trends are, and they're not entirely specific to the CIS, and in fact, they're driven mostly by the West.